today we are going to talk about how to thrive during economic events. And this is a webinar which is conducted to give you information about how different economic events can impact your can impact your investment decision, and also how a lot of these economic events can actually change the way you invest and change the way you trade. And we'll discuss a lot of strategies tonight, and each strategy is slightly different from other. We're going to talk about a few economic events. um, what are these economic events, how they impact. I'm also going to show you the live platform, where we can see, last 1 week, how it has been for the markets, what has been the reason, how various commodities and stocks have moved. And please ask if you have any questions while we are conducting this session. That's why I'm here live today. And we conduct a lot of these webinars week on week to make sure that we are able to provide more and more information about the markets to people. And this webinar is for information purposes only. So please, whatever we are going to discuss today, consider that as a piece of information. If you want to invest into anything, if you want to take a trade, please talk to your financial consultants, talk to your risk experts before you enter into any sort of strategies we are going to discuss about today. Right? Just very quickly, just use your chat options if you can hear me properly, if you can see my presentation, because this is really important. I want to make sure that everybody can use the chat option as well. Just try to use the chat option, just write yes or okay, and I'll get the message and I can definitely start this. Okay, yes, yes, yes. Okay, okay, okay. Perfect. I see most of you have replied yes. In case if there's a network congestion or you're not able to connect, you can definitely go to YouTube, subscribe our channel, and the copy of this webinar will be recorded very soon after we finish the session. Right? So now, to understand about the economic events, I will be sharing some strategies and the live platform as well. And to begin with, understanding the economic events, anything which happens in financial markets, um, whether it is related to the economic data, whether it is related to a political structure or a monetary structure or global events as such, everything impact your investments, everything impact your investment decisions, and everything impact the way you trade or the way you invest into different asset classes. So we have a lot of investors who always diversify into different markets. Sometimes there are investors which are more inclined towards commodities like gold, silver, oil. Sometimes we have investors I've seen, they're inclined more towards stocks, or some of them are inclined towards bonds. And each of these investors actually have their own risk appetite, they have their own investment objective. And a risk appetite can be from very cautious to very aggressive. So the first question is always to determine your risk appetite, what sort of an investor you are. Because when you know what sort of investor you are, uh, every investment decision you take is directed towards maintaining your risk appetite. So if you are a more aggressive investor, likes to take chances, you will be more inclined towards commodities and currencies. If you're a very conservative person, you will be more inclined towards bonds, something which gives you more fixed income. And that way we choose our investment product. So when we talk about understanding the economic events, what we are talking about, there are different kinds of economic events. One of that is the economic data. And this economic data comes out almost every day barring Saturday and Sunday, and if there are any uh, public holidays in US. But otherwise there are a lot of economic data which are coming, and I'm going to really quickly share the live platform with you, and where you can see this data and how it impacts your investment. Let me just right now quickly share the screen, and I'll be sharing the live platform with you. right here. Yeah, just logging on to the platform right now, and perfect right here. So today I'm going to show you how you can. So we have our the platform which I'm showing you is called a Century Trader, and it's a platform which is designed by our in-house technologist. And the way this platform has been designed, more emphasis has been put to simplify everything. And this is a platform for every investor, for every trader, from a novice investor to a advanced trader. Everything is in this platform. And if you want to see, for instance, that which are the important economic data coming here, all you have to do is go to the platform and click on news and analysis, click on economic calendar, and the moment you click on in economic calendar, you can maximize this. And most importantly, so this is something which is really really important, and I'll tell you how to see the economic calendar. Like this, today is Wednesday, so we are looking at few important economic data today. And what is the significance of those economic data? So first thing, select only those information, and please note it down if you have a notebook or a diary. And this is very investment 101 thing, or a trader 101 thing, because there are lot of traders and lot of new traders who always ask, how should I know that which data is important for me? And when I say data, that means economic statistics about inflation, about jobs, about industrial production of a country, which affects prices of gold, which affects prices of stocks on daily basis. That's why as a trader, economic calendar is like your bread and butter. You definitely should have a look at it before you are placing any day trade. Okay. Now, what the first thing which you have to do, whichever site you are looking this economic calendar on, you have to filter out the news which has the highest impact. Most of the calendars, they come up with a filter where you can filter out which news you have to see and which news has the highest impact. So let me show you how you filter it out here. Just here, if you see low, medium, high, click on high impact, and then also click on US. So you definitely need to see any news which is coming from US, any news which is coming from the Euro area, from Germany, and again, most importantly, also from UK, for example, right? So now what I see, today is 11th October, I select 11th October, and I see that today there are three news which has come. One, which is producers price index, which is the inflation data. Okay, inflation. So first news which you should definitely consider is inflation. Second thing is the labor data. So few very important economic data which you should definitely have a look. If you have your notepads, please write it down. First is inflation data. Okay, and inflation data is measured by looking at the CPI, consumer price index, and producers price index. In a very easy language to make you understand what is a consumer price index data or what is a CPI data, inflation is measured because the central bank wants to know that are people able to afford the basic goods or not. And when I say people, that means not everybody who is wealthy, but all kinds of people. The rich, the average, the middle class, the people who are living below poverty line, is the basic necessities or the basic goods are too expensive or are too cheap. And inflation measures that the rate in the change of prices have increased. Are they increasing at a faster rate or not? Good or bad? it still needs to be understood, because inflation is something which, if it is too high, it's not good, but if it is too low, then also it's not good. Inflation needs to be under 2 to 3% is what is decided by central bank, which means the increase in the prices of common goods should not be more than 2% a year. So the central bank wants to keep that target of 2%. But what has happened after 2020, because there was so much cash injected in the economy by the central banks, and why the cash was being injected? Because 2020 the lockdown happened, pandemic happened, COVID happened, so there was no work with people. And that's why the central banks across the world, to prevent the collapse of the financial system, to prevent the collapse of the economic structure, they injected more and more cash. They made loans very cheaper. You could borrow at a very cheap rate, at a very cost effective rate. So the loans were become cheaper, and more cash was being injected in the country. Now when people have more cash in their pockets, they will be demanding higher. So in last 2 years, the demand for a lot of products have increased. uh, Due to war situations in Russia and Ukraine, supply has been reduced, and we have seen prices going higher. So inflation in last 2 years, especially in US, went to 40-year high, and that was a big news, because that made dollar very strong, because the inflation was too high. And so when I say it made dollar too strong, not because of the inflation, but because of the fact that if inflation increases, central bank will be forced to withdraw some cash from the market and reduce the money supply. And how they reduce the money supply, and why they reduce the money supply? Because they want to prevent money going to people's pocket. So to do that, and why they want to prevent it? Because if there is less money in people's pocket, they will demand less. If they demand less, again the prices will start coming down. So there has to be a balance between the demand and supply, and that's what controls the inflation. So central bank increases the interest rates, decreases the interest rates. And when I say interest rates, that means the rate at which one person borrows money. Okay, so if loans are become cheaper, people borrow a lot, they borrow a lot, they spend a lot, they demand a lot, and that increases inflation. And when the inflation is needed to be reduced, then the rates are become rate becomes expensive, because loans are made expensive so that people borrow less, they spend less, there is less money with people, so that they can demand less. That is basically the idea behind inflation, and that is why inflation has been the top priority last 2 years. To bring inflation down, central bank has increased the interest rates, the cost of borrowing, or the loans. As I say, the loans have become much more expensive. Today in Dubai also, if you have to buy a car and you're taking an auto loan, you are paying a much higher rate of interest as compared to 2020 or 2019, when interest rates were low. Right, this time if you take a loan, you'll be paying a much higher interest. And that is the reason why a lot of people would not borrow, because the interest rates are too high, which means the supply of money in the economy reduces, and that brings down the demand for a lot of products, and that brings down the prices also, and that's how the inflation gets controlled. Right, but what happens when central bank takes these decisions? They just don't randomly decide that this is going to be done. They want to know what is the inflation percentage, and they can know this by looking at the CPI data, the inflation data. Right, so inflation data is something which is really important. It keeps coming every month, and central bank keeps a check on it, whether it is being reduced or not. Are the policies conducted by Fed working or not? Right, so today also, if you see the central bank, the last news which you see today, it says FOMC minutes, which means central bank uh, of US, which is called Federal Reserve. They conducted a meeting regarding the interest rates last week, and they decided that mostly it is expected that the interest rates will be kept higher because inflation is getting under control, and they want to reduce it down to that benchmark 2%, right? So today the minutes of those meetings are going to come out, and you'll be surprised to know that markets do move on the minutes which comes from the central bank meetings. So if you're a day trader, you definitely need to see. And if you see in this market calendar, what we have in our platform, you can see that they have shown the UAE time when it will come out. It will be out on 10 p.m. Dubai time, where you can see, you can watch this on YouTube as well, or mostly because this is the minutes of the meeting. So you can go to CNBC or Markets Watch or anywhere, and you'll be able to see that what are the minutes of the meeting. Normally, when there is a Fed meeting, it gets telecasted on different news channels. If there's a press conference, you can watch it on YouTube. But because this is just minutes of the meeting, so those will be displayed at 10 p.m. You can visit any website and you'll be able to see it. If you see, uh, because of these events, there is always a volatility in currencies, in commodities. And as you can see, this is only our market calendar which measures the impact of these events. And as you see, the volatility in the currency euro dollar in last 4 hours have been mostly around 20 to 30 points movement. So if I click on it, technically it will show you that how after the event or before the event it impacts right here. Okay. Again, as I said, see, this is something I do not want to make this too much complicated. Just trying to explain it to you. What are the sort of economic events one should see? And as I said, please ask me any questions if you're not clear about anything, because at the end of the day, uh, this is just a session. I will be available for a one-on-one session on the same topic. If you're interested, you can talk to your RMs, and we can connect over Zoom or Microsoft Team, or we have our setup in Emar Square. You can always come down to Emar Square Building 4. We have the entire facility over there, and we can definitely sit with you and we can teach you one-on-one how this works. So first thing, we understand about the events, that which are the important events. So as I said, inflation, something really important. Moving on to the next day, today is 11th, tomorrow is going to be 12th October. So in on 12th of October, if you see, there are few very important news coming in. Let's start with UK first. We'll see house prices balance, we will see industrial production, and the GDP numbers coming straight from UK. GDP is a really, really important news, because when we talk about GDP, can anyone tell me what GDP is? You can use your chat options. You can search if you want in Google. It's really going to help you. Anything which you write on the chat option, you're going to remember it for a longer time. What do you think the GDP is? I'll give you a hint. It's gross domestic product. It's the full form. But what do you think GDP actually is? What is the significance of GDP? Everybody talks about how a GDP of US is, how Indian GDP is, how GDP of China is increasing or decreasing. So, okay, the value of goods and services in a country, perfect, great. I think, and just to add on to this, the monetary value, if I would say, the monetary value of goods and services which are produced in a country over a period of time. So I can measure quarter on quarter GDP, month on month GDP, year on year increase or decrease in the growth rate also. So if I say year on year GDP, I'm talking about the increase in the growth rate. GDP is mostly the growth rate of a country. At what rate the country is growing when I talk about the GDP percentage. Ideally, GDP is measured as a monetary value. So if I would say the US GDP is around $25 trillion, right? That is the monetary value of all the goods and services which are produced within UK. So within US. So GDP is a very, very important number. And it comes almost every month and quarter, mostly comes quarterly, and it shows that whether the growth rate of a country has become better. Is it up to the expectation? If it is, then it's a positive news. The currency related to that country mostly appreciates. The markets, they move for that particular event on a higher side. And if it is not, then it might have a negative impact. So, in terms, and I'll give you an example, in terms of UK, if the GDP numbers, for example, when we see this particular platform, it shows that the GDP numbers are expected to be. So, if you see on this column, there are the GDP month on month. There is something called previous, forecast, and actual right here in the columns. If you see, so the previous was minus 0.5%, and it doesn't mean that the growth is negative. When you say minus 0.5%, it means the rate at which the UK economy is expected to grow. That rate is, if it was 2%, then it grew by 1.5, so minus 0.5%. It does not mean that the economy is going negative. It just means that the growth rate which would be X amount, is now less by 0.5%. So the economy is growing, but the growth rate is not the same. Previously, when we saw the month on month, it declined by minus 0.5. Now, tomorrow, the expectation is at whatever rate month on month the UK economy is growing at, it is expected that 0.1% higher is anticipated for tomorrow. So, if the actual growth rate is up to the 0.1% or more, it will make GBP USD, pound versus dollar, more stronger. It might create slight increase in the UK stocks, and that's how it goes. So this is the significance of the GDP data. As a trader, you must understand that the impact of these news are going to be for a very shorter period of time. So you do your trade, you do in out, your take profit, stop losses hit, and you're out of it. Because these data, they come almost every 10 days, every 15 days. Every new day is a different data. So during the price action analysis strategy, what we basically see is that a lot of times when these companies come up with the earnings, and it happens every quarter throughout the year. So we see Q1, Q2, Q3, Q4. And the idea behind this is the price action analysis actually shows you that how we can use the historic data to understand that what happens to a stock after they declare their results. So if I buy a stock before they declare their financials and hold on to it for the same day, so what is the kind of return I could generate? And we go 10 years back and evaluate that if Q1, for example, the first quarter earnings are coming for Domino's, the pizza company, and I will go and evaluate 10 years of scenarios where, had I bought this share before they disclose their financial results and held on to that day till they have disclosed it and wait for the market movement, on an average, I could make 1.8%. Because in last 10 years, every time Domino's would share financial results before the market opens, and then if I hold on to that stock before that and only sell it after they have disclosed their financial results, the stock price would move on an average of 1.8 to 2% after they have disclosed the results. And it will move higher if the results are favorable, if it would go down if the results are not. And that's how basically the earnings work. So what we do is, during a price action analysis flyer, a price action analysis strategy, we evaluate the absolute returns on the stocks over the last 10 years, and we see what would happen if I buy the stock before they disclose the earnings and held on to it until the end of the day, or until the end of the week, or until the end of the month. And we evaluate all the three scenarios for 10 years. And that gives us a perspective that I have a stock which I can buy right now and hold on to it by the end of the day or by the end of the week or by the end of the year, whichever scenario gives me the higher return. So you can see this very clearly in the flyer that this is something which investors like to see, because this statistics is not that easy to get. You have to get into a lot of exhaustive data analysis to see last 10 years of uh, absolute returns which are generated, positive or negative, and we have to see all those companies, and there are multiple companies, and there are multiple companies with multiple results and different scenarios, right? As you can see in the flyer, and I'm going to take example, as I said, for Domino's. We all know Domino's company, right? So we are going to take an example. If you see, the Domino's stock has right here, this column, very important. As per the analysis done for 10 years, we have seen that Domino's, if I buy on the day of earnings and hold on to it until the end of the day when they have already disclosed their earnings, I could, on an average, make a return of 1.8%. The maximum price which moves on the same day, historically, we have seen is around 2.8, and the maximum price downside was minus 4.7%. So if I buy Domino's before the earnings on the day, and hold on to it until the end of the day after the earnings have come, I could make an average return of 1.8% as per the statistics. Highest gain could be 2.8%, highest loss could be 4.7%. So I should be ready for both. Same if I buy on the day of earnings and hold on to it for a week, I could make an average return of 2.2%. Maximum gain could be 7.37, maximum loss could be 7.35. If I buy the same stock and hold on to it for a month after the earnings, 5.9% absolute gain expected, 8.6 being the highest, 9.7 being the highest loss. So I have to be ready for both the scenarios. That's why I said that this is something which we must understand has both the scenarios, right? So this is something, guys, this is one of the strategy. Let me see, I think my screen has actually frozen, so otherwise I would let me show you a real quick thing. This should work. Yeah, okay, perfect. I think everybody can see this. Yeah, okay. So the strategy which you see right now, this is called, I'm going to fill it right here. This is between two kinds of oil, Brent and WTI, right? So there are two kinds of oil. There is one Brent oil, there is crude oil, which is US oil. And this is a strategy which is about the price difference between two kinds of oil. One is the UK, one is the European based, and one is the US based. So here we are not speculating on the oil prices. We're speculating on the difference between the oil prices. And this is again really important, guys. The strategy which I'm going to show you here, and the chart which you see right now is all about understanding the strategy where how we can reduce the impact of volatility in the market. And in the past, these strategies have worked well, but of course it comes with their fair share of risk. And that's why I said that let's just try to understand what the strategy is, and execution is something which we must do after evaluating proper risk and not before that. So when we talk about a Brent WTI strategy, it's all about understanding the price difference between the both the kinds of oil are tradable. Both of them have a very small price difference. Currently it's around $2.5, $3, and the expectation currently is that this price difference will increase. So what we do in that case, We buy Brent and we short sell WTI, expecting either Brent will go higher or WTI will come down, and the price difference between both will increase. So you make profit on the increasing price difference, you make loss on the decreasing price difference. And that's how this particular strategy goes. So like this, there are a lot of strategies, guys. We can definitely look into different kinds of strategies. I think the best part will always be to connect one on one and discuss about this. As I said, the best way to understand any sort of strategy, the best way to invest also, is to have more and more information and then evaluate our risk, whether this strategy will suit our risk appetite or not, right? So let's meet one on one. I see a lot of people already sending me a request for one on one session. So I think this is actually so what you can do is, I think it's most like a first come first serve basis. So you can talk to your RMs and whosoever has recommended you this webinar, and definitely we can have a one on one session. And once we connect together, I will show you all of these strategies and I'll explain you that how you can do it right. So thank you so much for coming today, and I hope that this session has been fruitful for you, because the most important part over here is that we must understand, we must have all the information before we start trading or investing. So let's meet real soon in the office, or Zoom or Microsoft Team, and we'll do a one-on-one session. I'll show you how the live platform works. I'll discuss some strategies with you as well, and we'll meet you next week with a different topic for a different webinar. And till then, stay invested. Try to take more and more information, read more and more, and be in touch with the markets. That's the mantra I would like to leave you with. So once again, good night. Thank you so much for your time. My name is Yogesh, and we'll meet next week again on a different topic at the same time.